Hey there, it's Dean Odell with Seven Gables Real Estate in the Odell Group. It is time for Tustin Talks, and thanks for tuning in. Let's look at what we're going to be doing today here. We're going to be checking out these charts individually, and in addition to that, we're also going to have the Tustin chart today, which you can only find here on the Odell Group. Do us a favor, subscribe, like this thing. Let's get the algorithm working, and let's start here with the active listing inventory. So what you can see is that blue line is holding steady. Look how different it is. Go back to January. It's almost been flat the whole year. That is just crazy. And you can see from 2 weeks ago, it's pretty steady. And you can see where we were last year at 4,030 homes and the 3-year average, 6,723. So boy, we still need inventory. That's for sure. Going to the next one. This is an interesting chart because it shows how the homes placed on the market, how much it's changed in the past years. And if you look at the 2017 to 2019, we could almost call those the pre-COVID years, right? You can see that all the homes priced on the market that year were 25,845. And you can see how they were broken down by price range, right? And you can see the difference now. For instance, if you go at the 0 to 500 range, you can see that there's 77% less homes for people to buy, right? So that's a combination of less homes, plus the fact that prices have gone up so much. So you can see how hard it is for somebody to get into this entry-level price range. And in addition to that, the price range has moved up. So a lot of these houses, even though they're more expensive, as you'll notice, like say the $1.5 million to $2 million price range, where we actually have a positive increase, meaning there's more sales going on now in that price range than there was pre-COVID. Well, that's because prices have gone up. And the sad part is the homes aren't the same between $1.5 million to $2 million as they used to be. So the buyers are really having a tough go at this market because it's hard enough to get into the market. And then in addition to that, you're getting less home than you used to get pre-COVID. So you can study this chart, freeze it, and check that all out by different price ranges. Moving to the next chart. So now we're looking at Orange County demand. We can see it's 1,576 homes in the last 30 days that have gone into escrow, which is pretty consistent with 2 weeks ago. And last year where we were about 20% higher. And then 3 years ago, you could see we were a lot higher, almost 1,000 homes more. Again, we are that blue line, and that blue line is just almost flatlined like the listing inventory, right? So if you figure we've got 2,000 homes or so coming up every 30 days, and we got 1,576 going in, you can see the absorption rate's pretty high there. About 75% of the homes are going into escrow. That's not leaving a whole lot of inventory to carry over to the next month. Looking at Orange County sales now, this is similar to that other chart that I showed you, but it's on the sales side, not the listing side. You can see in 2023 how things broke down by price range. So you can see if we use those same examples, the 500 range, 0 to 500, and we look at the 3-year average, you could see pre-COVID, we were selling 4,000 homes, in that price range, where now we're only selling 1,000 homes in that price range. I mean, that's 75% less homes now that are under 500,000. And that is making it really tough on the buyers. And you can see how that changes as you go through the chart. But let's focus again on the 1 million to 1.5 range. And you'll notice in 2023, for example, where we've had 3,100 homes go in, where prior to COVID, the next row down the column anyway, is 2,061. So you could see the difference there. 51% more homes now sell between $1 million to $1.5 million than pre-COVID. And again, same thing applies, right? It's, houses are more expensive than they were back then. So obviously there's more sales going on, and you can see what the differences are. What this really shows, both these charts that we went over, this historical chart, is it just shows how much the problem is with affordability right now. There is just not that many affordable homes for people in Orange County. Looking at the expected marketing time right now, you can see it's holding pretty steady at 46 days. It was 2 weeks ago, it was 47, and last year it was 65. The 3-year average before that was 79. So you can see we've been in either a slight seller's market or hot seller's market for a long, long time. We have not been in a balanced market, or I should even say a buyer's seller's market. Instead, we have not been in a buyer's market since like 2011, if you look at the historical perspective. So it has been in the seller's favor for a long, long time. But we like to break that down by price range, which brings us to our next chart. And you can see the seller's hot market again, all the way up to $2 million, slight seller's market between 2 and 4, and a deep buyer's market over 4 million. And you can look at the marketing time by price range and how that compares to last year, which is in that very last column. So you can see the speed of the market is pretty much quicker for everything under $4 million. So still a strong market for sellers. Now we go to our Tustin data chart, which we told you we're the only ones that have this information. These are our 3 zip codes. And look at what the for sale is showing. Look at how much that inventory is down versus last year. Probably if you average that across the 3 zip codes, you'd be somewhere in the 50% range, half as many houses available there. New listings, you can see that as well. Probably again, averages out to close to 50%. So you got half as many homes out there for sale and that are being listed. And then you look at the solds. And what's interesting about 92705 is they had the same amount of sales this year as last year. So holding kind of steady there in 92705 for having less inventory. 92780, you can see their sales are down as well as Tustin Ranch. So interesting stats there. And then you look at the pendings and you can see the pendings are down as well. See how that is. Then you look at the months of inventory. Well, you guys might remember when this month of inventory was only down to weeks. So now we're at 1 to 1.3 across Tustin, which is still a big time seller's market. We need to be closer to 4 to 6 months for things to start leveling off, and over 6 months for the buyer to have the advantage. So we're a long way from that. You can see the active listing prices pretty much up everywhere except for Tustin Ranch. And you can see the average sold price the same way. So something going on there in the 92782 zip code, right? And that things are down a little bit. Doesn't necessarily mean that prices have gone down. It just means that lower priced homes are selling. Okay. So if you look at the final list price to sales price, you can see it's still very strong. I mean, still really strong, real close to that 100%, meaning people are getting every dime they're asking on average, right? And then we got our average days on the market. You can see across the 3 zip codes, if you average those out, you got probably 13, 14 days, about 2 weeks before your house sells on average. So still a very strong market. Just not enough inventory to meet the demand. In 92782, we talked about that being a little bit different with the average sold price being down. And that is probably a function, of interest rates and people maybe asking a little bit too much money for what they're selling, right? Okay, so now we're going to move on to my advice for buyers and sellers. Starting to sound like a broken record here. I know if you guys are fans of this show and you watch it a lot, I've been saying the same thing for a long time, which is buyers, you're buying now, make sure you're buying for the long term. Do not have fear of missing out. At some point, things will change. I would not expect a huge crash in prices. It is going to take a lot of inventory to do that, or it's going to have to really take high interest rates. And interest rates are as high as they've been in a long time. So I don't think that's going to be the issue. The only other thing out there is the health of the economy. And everybody's got their own opinion on what that means, whether it's going to be a recession, how deep it's going to be, all that kind of stuff. So the best advice I can give you guys is just to make sure you buy for the long term right now. Sellers, congratulations. Another good 2-week report here for you guys. Everything's still rolling for you. I know the biggest problem for most of the sellers that I'm talking to right now, and what's interesting is in the last 2 weeks, man, have I had a lot of phone calls, more than all year. So whether that's a sign that these people are going to start listing their houses or whether they're just trying to figure things out, people are certainly thinking about moving. There's no doubt about that. I haven't seen the amount of phone calls in the last 2 weeks come in a long time. So I don't know what that means for the fourth quarter or first quarter, but people are definitely thinking about moving because there is pent up demand. When you only have half as many homes going to sale, and when I say demand, I mean demand to sell. There's only half as many sellers going on the market, right? So we know people's lives change. There's things that happen, events that happen, and people are waiting to move. They're trying to figure it out. A lot of people don't know where they're going to go. Best thing you can do is give us a call. Let's talk about it. Let's see if we have a solution for you. We certainly have a solution in terms of getting your house ready for you, doing all the staging, the fix up, everything, and getting you top dollar. We're very, very good at that. So I don't think there's anybody better. quite honestly. So give us a call. We'd love to help you guys out. If you want to know more about what we can do for you, go to our URL, odellseller.com. Just type that into your browser. It'll take you right there, and you can see a lot of what we can do for you. Okay, and wrapping up here, you can see this is our team here. We have people from their 20s all the way up to almost their 80s, believe it or not. Yes, don't want to give away my mom's age there, but that is my mom sitting next to me. That is not my wife, okay? We are different in age, and that's my sister on the other side there, April. From left to right, we have Carmina on top on the left, Peter below her, and Nicole Gailey. Sarah, we just call her Sarah I because her last name's so hard to pronounce. And we got Nicole J, so we don't mix up with the other Nicole. So anyway, all our agents, they're great. They're awesome. We're here to please everybody. We got a great support staff. We'll take real good care of you. Anyway, so go ahead and subscribe, and we hope to see you on the next Tustin Talks. Thanks. Bye-bye.